people wants to know about sole proprietorship. So folks are saying, whoa, what's the pros and the cons of being a sole proprietor? I just want simple. My life is simple. So let's just kind of, you know, um, tap into this particular pros and the cons being a sole proprietor. So basically, just to understand, sole proprietor is someone and who owns a incorporated company, which means that they didn't really bother to form a company. They just use their own social security number, their name to do a business. So a lot of times it has a little bit divide between sole proprietor, are you doing a business or you are a hobby person, you're doing your hobby. So sometimes when IRS come around to look at your sole proprietorship business, they would questioning you if you don't make money on those business. The IRS would question whether this is your hobby or it is your business. So sole proprietor is convenient. You don't need to form a company. You just decided tomorrow I'm a sole proprietor. I am going to be a freelancer and I am going to write article and send it to the newspaper and I'm going to record my home office, my expenses, my computer, and also trainings I took how to be a freelance writer, right? So all of that is proper. All of that is okay. So these are the sole proprietors. And the Schedule C is the form you use. And calculating when you are using Schedule C, there's income you need to come up and expenses, right? If you are a freelancer, you probably have home office expense. You also have your computer, so training, like I mentioned. So all of these are appropriate expense. Once you calculate your expense, then you know what's the profit. And as a sole proprietor, all of your profit is treated just like payroll, just like W-2. So you pay Social Security and you pay Medicare. So you have this what they call self-employment tax. All right. So that is a sole proprietor. So you do your business, you file your taxes under 1040, and you do your Schedule C, you pay your self-employment taxes, and you have additional income other than your other income. And the benefit being sole proprietor, of course, it is easy to start. I just said to you that you can start tomorrow, right? To be a sole proprietor, and you have a complete control. And you don't really need to tell someone, oh, I'm starting tomorrow. And you don't need to get any permission. And of course, if you are in the business that needing license, of course, you need to get your license permit applied. But if you are just sole proprietor like the freelancer I was using, you don't need any license. You can just start right away. And you operate under your own name. You may have a DBA name, but when you open up your bank account, because you are sole proprietor, you're opening up a personal account and you have a DBA name on there. So that way you can actually separating your sole proprietor income versus your regular other income. So your expenses can come under that same account. So it's a better accounting. Am I right? Then you, of course, don't have to keep all these incorporation record like board meeting minute and all of these formality that required for corporation, and you don't need to keep that because you are not. You don't have to set up payroll for yourself. No, because all of your profit is your payroll. And if you decided tomorrow you are not in the good mood, you're just gonna dissolve your sole proprietor, you go like, I don't care, I'm closing. Oh yeah, you can close. So on 1040, and you will just tell the IRS that you close your sole proprietor. I know you have a question for you about LLC. You say, well, I am a sole proprietor, but somehow I am a LLC. Yes, if you are a single member LLC and you are treated like a sole proprietor in the tax form. So you actually file Schedule C with your LLC name on it because you're a single member LLC. So everything else is the same. If you make profit, you pay self-employment tax and you don't have to pay yourself a salary because everything you make is your salary. So these are all the same. The only difference is that when you have the LLC formed, your business risk is within that LLC. Those are what your attorney was telling you. So these are definitely the benefit of the sole proprietor. So there's other benefit related to being a sole proprietor. You know what that is? You don't have to file other tax return. And otherwise you have to file corporation tax return. They even have a different due date. Really confusing. Not confusing. If you're with us, we'll teach you. But for you being new, not knowing it, there's a lot more things to do. So of course that saves you one more tax filing. And of course there are people goes, oh, there's also no double taxation if you're being sole proprietor. I guess depends on how you define double taxation. Double taxation could be defined as corporation tax plus dividend tax, but also could be defined as income tax plus self-employment tax. So I would say that there is one kind of double taxation doesn't apply. Otherwise, you know, as a sole proprietor, you do too. You do pay two taxes if you have profit. Of course, if you don't have profit, you have a loss, it's a direct reduction to your other income. Say if you're a freelancer, but you work a full-time job somewhere else, you got your W-2 for $50,000, freelancer, you lost $5,000, then your taxable income would only be $45,000. So that's, you can consider that's a benefit. Now let's talk about cons of being a sole proprietor. We talked about a lot of things already, but the biggest drawback being a sole proprietor is audit risk. The audit risk is about 3 times more likely by the IRS just because you filed Schedule C. You may say, why? Why is that? Know why? Because most of the sole proprietors are people just dabbled into the business for the first time, right? So they don't really know a lot. They make mistakes. That's very normal. So IRS is simply just trying to identify the most mistakes were made in the tax return. Then they are the one auditing the Schedule C. They have this special division called the self-employment division. They do your Schedule C audit all the time. Okay. And so what they do when they audit you, they look at your income to make sure you got all your income. And there, if you borrow money, you better have proofs. Otherwise, it's your income. They also look at your deductions. They want to make sure that you're deducting things properly. For example, if you deduct a mileage, a bunch of money, you better have a list of the mileage you drove. And there's 5 items I talked about in my other videos, right, folks? There's 5 things you need to put on the spreadsheet with the mileage, with the purpose of the driving, where you start, where you end, and what day you did that, and the total mileage. So those are 5 items. You can't get away from that. You have to have it. Then they will calculate. I'll tell you, I have gone through so many audits for our client, right? I'm regarded an expert for that. And I have never, ever 100% won the mileage deduction. Because when you get audited for mileage deduction, trust me, you will end up not being able to prove what you claimed on your tax return if you don't have these 5 elements on every single trip you take. You know, I take it back. There's one lady so many years ago, older lady, and she passed the mileage deduction, mileage audit. You know how she passed it? Because she writes every time she drives, she has this big calendar. She actually writes on it, and who did she see, the purpose of the trip, how, from where to where, and also the mileage on that box in that day. This was like 15 years ago. That works, folks. We're not. We're in 2022 and going to end. We're going to be in 2023. Time is very different and the requirement is very different. So you want to make sure that you know the risk being audited and you want to do perfect job on that. So the other things is that when you are sole proprietor, you borrow money for your business, you're personally liable. And if your business is not going well, you're personally liable. And that is why people want to form a limited liability company for their endeavors instead of just using their name and a social security number to do business. So I would strongly recommend you to consider that. Consider the audit risk, consider the liability, and on the other side, two more things I want to mention to you. If you are sole proprietor, it is very difficult to raise capital. And when you want to grow your business and to raise capital, and the sole proprietor is one of the most difficult entity for you to be able to raise money. And why is that matter? It matters because if you are really wealthy, you probably don't do sole proprietorship. And you're doing sole proprietorship because your money is limited. And who is going to give you money when you are relying on your own finance, which is not even significant, right? And people would rely on your business because your business has equipment, your business has potential to grow more, and they would collateralize on your business and they would not want you as a person, a sole proprietor, to raise capital. And of course, when you borrow loans, and you always, when you are sole proprietor, the bank also look at how much equity you have on your own, and the business is not a consideration because it's part of you. But imagine if I have a C corporation has been running for a couple of years, my C corporation has always been running and has potential to make a lot of money, that would be a additional benefit when you borrow money from the bank. All right. So you're probably gonna go, oh, Ying, I have a sole proprietorship, but when am I going to move away from it? I'm here. Okay, fine. I'm going to move, but when? What is the best time? The year end right now is the best time. And you can actually look at what you did last year. If you file Schedule C, maybe it is time to move that into a corporation. S corporation, move that into a LLC if you have multi-members. So partnership. So you can move, right? This is a good time. And if you want a number, I can give you a number. If your profit under sole proprietor is 25,000 and more, you got that much profit, it is time to move to another entity. The reason I gave you 25,000 because I calculated how much it would cost you to move to a corporation just by saving your taxes. So 25,000 is your threshold, and if you have a lot of money on your company account that you already saved over the years you're working on the sole proprietor, that is a good time to move away from sole proprietor. If you want to reduce your personal liability, you need to move away from sole proprietor. If you want to upgrade and reduce your personal risk with other entity, you would want to move to another entity type to really upgrade. If you start hiring employees, it is better to move to another entity. So with all of that said, and we kind of give you an understanding of being a sole proprietor, of course you can. I call that American dream starting point. When you just started business, no need to spend $1,000 for incorporation. You can try it out on your sole proprietorship platform. And as soon as you start making money, as soon as you see hope, and you move. And that is how you make your dream bigger. That's how you can get to another scale for your business, right? And I hope this conversation with you helps you to make up your mind. We still have times for year of 2022, but for 2023, start new. If you already over 25,000 profit total, you don't have any need to be under sole proprietor. I'll see you at the other end when you become a corporation.